What's up everyone, I am 7-Star Mike and this is probably one of the most important videos I will ever do. This is about bumping up your stop loss to protect profits and to maximize your gains without taking on extra risk. A huge problem traders have is either selling too early, and I used to be the king of that, or holding on too late. So using this method of bumping up your stop loss to protect profits is going to solve both of those problems. Okay, let's get right into it now. What we're watching on the screen is SPY. Now I was trading ES this morning, but I'm going to use SPY because a lot of you guys use SPY and this chart might look familiar to you. So let's start with this level here. I've got it at 449.50. That's roughly the area that I had on watch for ES. So I have that level on my ES chart. I just transferred it over to SPY so we can do this example here. Let's zoom in and focus on the upside first, and then we'll get to the downside. We'll treat those as two separate trades. So my entry was here. I wanted to get a long position above 449.50. Now, where do we set our stops? So using this chart here, if the entry is above this yellow line here, we're going to use one of these lows as our stop. So what we can do is put a line there, and once we're in up here, if we cross back below and make a new low of day, we can be out of the position. So you can use this line here, you can use this one here. It just depends on the chart that you're looking at. So this is just a SPY chart when I was trading ES, so we're just going to say if it broke a low of day, we would get out. Now as it moves up in our favor, you can see it moves up, pulls back, moves up, pulls back, moves up. There's always pullbacks even with the broader upward swing. So the question is, where do we get out of this trade once we're long down here? What we're going to do is bump up the stops for every lower swing. And what I mean by that is this. So we're in above this line, we're making a move upwards, we pull back, and then make another move upwards. So we're going to put a line at the bottom of that pullback right there. Let's zoom in even more. So we made a move up, we pulled back, we stopped at this line and made the next move up. So this is our stop. So if it ever crosses below this level, that's where we're going to get out. Now it makes the next move up over here and then it pulls back again. So when it pulls back again, what we're going to do is bump the stop up to there. Then it made another higher high. So now we're going to get out of this trade if it breaks below this line here. So what we can do is go ahead and remove the other one because we're now using this as our stop. So it made another move up, it made a move down, and then another move up. So what we're going to do is take that next swing and we're going to go ahead and place a stop there. And since that's our new stop, we can go ahead and get rid of this one. So let's pull that one off the screen. Now you can see it did come back to test that and then bounced again, so it went on another high. A little bit of consolidation in here and then another high in here. So what we can do is take the next swing low, which is down in this area here. So it made it over here and it made it over here again. So once we break above this consolidation, we make a swing low and then a higher high. So we're going to take that swing low and that's our new stop. So we can go ahead and remove this line here because we bumped up the stop again. Now up here we made a higher high, we pulled back again. So we're going to drop a line on that pullback and we're going to go ahead and delete this one because we've upped our stop. So we made a higher high, we pulled back to that level. That's where we're going to stop out. You can see we came back down to test it and went on another high again. So this pullback here, let's put another line there. And since we bumped up our stop, we're going to go ahead and remove this last one that we had in there. So this is our new stop. We made another high up and we put a stop in here. So again, all we're doing is as this ticker, the underlying moves up, we're going to keep moving the stop up to the swing lows. So it made a high, swing low is down here, we're going to put the stop there. It made a high, swing low is down here, we're going to put the stop there. Swing high, now it didn't get anywhere above that, so we can take you out right here. If you still had this one down here, you would be out down here on this 452.26 is where that is. This one's 452.69. So there's a good gap between those. So depending on whether you had this one drawn in yet or not, you can still get out this one. So from 449.50 to 452.26, that's a pretty good move for options. Okay, I'm an options trader, so that move for options is going to translate into a nice trade. Now let's get rid of these lines here. The next trade I actually took for the day was this 449.50 again. Now remember, I'm trading ES, so this line wasn't exactly where I was trading, but that's the equivalent of it on SPY. So let's go ahead and get rid of that one there. So 449.50, that's the line I was looking at to go long in the morning. So once we had this big drop here, we came right back down to that level, bounced, and then broke through it. So I went short on the break of 449.50. Now we're going to use that same principle that we used on the way up on the way down. So we broke through this level of support. We had a little bit of a swing on the reversal and then a new lower low. So we're going to use this swing. That's going to be our new stop. So we're going to place a line right there. Okay, we went down, made a lower low, made another swing up, and then a lower low again. So this swing up, that's where we're gonna bump the stop up to. So that's our new stop loss there from a short up here. So we have a new loss. We're gonna get rid of this one here. Just go ahead and delete that from your chart because this is our new stop loss right here. Now we made another swing low and then another swing up. So we're gonna use this as our new stop. So we can bump this up constantly as it's moving down. Since we have a new stop loss, we can get rid of this one. Now you can see here we have a candle that closed above it, so you can get out of the trade there. And this is a short from 449.50 to 447.50. Again, that's a $2 move. Trading options, that's going to be a pretty good gain. Now you can see we did make a lower low after that. So if you didn't get stopped out here, you would try and figure out where your next swing is going to be. So it would probably be in here. But remember, this is a $2 move on a big drop that we already had. We zoom out a little bit. So from way up here, we had a big drop down here, paused for a little bit, and then another big drop. So if you're down here and you're trying to capture as much as you can and you're really worried about trying to get out at the low, remember, we don't know where the low is, so this can quickly reverse. Remember, if you didn't stop out up here, look how quickly it reversed on you and you would have lost all of your gains if you didn't have a stop in there. So same thing on the flip side. As we're going down, if you get stopped out here, this is 447.54. The low of the day was somewhere 446.30. Okay, so it's a little more than $1. So some people are going to be complaining and saying, oh, low of day was $1 more. You could have got a better trade out of it. But remember, we can't time the tops and bottoms of charts. So the best thing we can do is trade from one level to the next. And once you're profitable, this method here of bumping up the stop as it works in your favor is going to maximize those gains. So when it does reverse on you, you're going to lock in gains. And if it doesn't reverse on you, you're just going to keep moving the stop to the next logical level. And you want to take these swings and change it to that there. So again, on the way up, we have a swing low right there, mark the level. The next swing low, mark the level. The next swing low, mark the level. Each time it moves up and makes a higher high and pulls back, you're going to use those pullbacks as your new stop loss. This is a way to maximize your gains. And you really want to work this whole trend upwards, and this is how you're going to capitalize on that. So a lot of people sell too early or hold on to a trade too long. Using this method to bump up your stops as the trade moves in your favor, this is what's going to maximize your gains, and you're still not going to hit the tops and bottoms, but remember, no one can. So this is a way to maximize your gains without taking on extra risk. Hope that helps. We'll see you next time.